If you're a first-time buyer, what does the mortgage journey look like for you? This is going to be the first video of two where I'm going to take you through the journey as a first-time buyer to getting a mortgage and subsequently completing on your property purchase. I'm going to take you up to, on this video, right up to finding a property and getting an offer accepted. The video after, we'll look at making the actual application, getting a mortgage offer, and what happens after that. Now, before I go any further, of course, your circumstances will be individual to you. You may need to do things in a slightly different order, but whatever you do, please speak with a mortgage broker so you know exactly what your next steps are. Now, the place where I think first-time buyers in particular should start is with their credit report. Not actually finding out what you can borrow, what monthly payments might be, what size deposit you need, because all that comes from your credit report and knowing what your credit history is. Now, depending on your credit history, whether you have adverse or not, will often determine how much deposit you need. So if you have adverse credit, you typically need a larger deposit, so maybe 15 or 20%. And if you have good, clear credit history, you will likely need a smaller deposit, 5 or 10% as a minimum. Well, that will then dictate your monthly payments. Because if you have adverse credit, you'll likely be looking at more specialist lenders with higher interest rates. Therefore, the monthly payments will be higher. So it all goes back to the credit report. If you have an up-to-date credit report, ideally from somewhere like Check My File, which shows the three main credit referencing agencies that lenders use in the UK. So Experian, Equifax and TransUnion. It shows all three in one report. Sign up if you haven't done so already. Get a trial with Check My File. Download a full report and then cancel your trial if you wish. Make sure you do it before 30 days. But before you cancel, make sure you get the report sent across to a mortgage broker for them to review and then just break down what options are available to you. If you are a first-time buyer and you're right at the start of the journey to get in a mortgage, as well as getting a credit report done, one of the best things you can do is get on the electoral roll where you live. That helps lenders pick you up electronically so they can verify your address. And also, if you don't have a credit history, it's really worth starting to build up a credit history. One of the easiest and quickest ways to do so is to get a credit card and just put on a little bit a month. So it might be a weekly shop, it might be a phone bill, whatever it might be, and just make sure that you clear it each month. So put £100 on a month or even less. As long as you're clearing it each month, that will build your credit history because it represents that you are able to clear debt. So if you're a first-time buyer, right at the beginning of your journey, the first 3 steps are getting on the electoral roll where you live, start building your credit history, get an up-to-date credit report checked by a mortgage broker so you know exactly where you stand with your credit history. Like I said, which will dictate what your potential options are moving forward with a mortgage. So you're on the electoral roll, you're starting to build your credit history up, you have a credit report to be checked by a mortgage broker. So now the next step really is to find the mortgage broker you want to deal with your mortgage. Now really I would suggest talking to at least 2, maybe 3 mortgage brokers to get the right feel for it, because it is such a huge deal getting a mortgage and buying a house. So you really want to be using someone who you trust. So make sure that you talk to more than one. Now, key thing really to bear in mind is that unless the mortgage broker has access to very few lenders, typically speaking, we'll all have access to more or less the same lenders, the same products. So if a mortgage broker says their whole of market, which is a meaningless phrase, I just dismiss it. Everyone's in, pretty much every broker is in the same boat. What you want to be concentrating on is who you feel will look after you the best, who will support you right along the journey, all the way through from this, the first point when you talk to them, all the way through until you no longer need a mortgage. Who's really contactable, who's offering you the best, most suitable ways to get hold of them, who responds to you in a timely manner. Things like that. You just want to be thinking about things like that, really. Now, talking and working with mortgage brokers, it may come down to cost. Some mortgage brokers, like myself, will charge a fee. Others may be fee-free. That might mean they take on more clients to make up for that shortfall. So they may have less time to dedicate to people. You don't know. But that's why you want to be talking to a mortgage broker to fully understand how they operate, how they work, how often you can communicate with them, how often are they going to keep you updated throughout the process. You want to be getting this information up top before you commit to working with them. Because like I said, it's such an important stage of your life. You want to get this bit really right. So now you have your mortgage broker. Now the next step, they're going to have the initial discussion with you. They're going to go through your circumstances, your income, your committed expenditures, things like that. They'll give you an idea of what you can borrow and what your monthly payments might be. Now the next step is to start getting your documentation together if you haven't done so already. Now you're going to need a proof of ID, so passport, driving license. You're going to need proof of address, so it could be driving license, bank statements, utility bill, things like that. You're going to need at least your last 3 months bank statements, and that will be for all accounts. So you'll need to provide bank statements showing your income coming in, expenditure for things like loans, credit cards, shopping, bank accounts showing your daily activities. You're going to need to provide proof of deposit. So that might be, if it's a gifted deposit letter. If it's in savings account, a savings account statement. You'll need to provide proof of deposit. And also one of the key elements of what you need to provide is proof of income. Now, if you're employed, that will be your latest 3 months pay slips. If you're self-employed as a sole trader, that will be your latest 2 years tax returns and your latest 2 years tax year overviews. If you're a limited company, that will be your latest 2 years accounts. Of course, if you've been trading for 1 year only, then obviously it's just your 1 year's accounts or 1 year's tax return, 1 year tax year overview. If you've only just started your job or you're about to start a job within the next 3 months, perfectly fine to look to apply for a mortgage, depending on the credit history and lender criteria. Then your broker will likely require a signed contract. So you've got your documents together for your mortgage broker, so proof of ID, address, pay slips, bank statements, proof of deposit. Next step will be for them to do what's called a decision in principle. It can be called an agreement in principle, mortgage in principle. It's the exact same thing. It's where they go to a lender to get a preliminary accept for mortgage. So they'll go and they'll apply for a decision in principle. It may be based on a property you've already found, or it might be just a more generic one to give you an idea of what you can borrow. This is a real first big step along the way to getting a mortgage. Because once you've got a decision in principle, then you can really start to look for properties and making offers. Because if you're making an offer before you got a decision in principle, you don't actually know if a lender is likely going to accept you. Really not a great idea. Also, some estate agents will ask to see a decision in principle as well before accepting your offer. So really, you want to be getting your documents across to a mortgage broker so they can get a decision in principle done for you, so then you can go off and start viewing properties and making offers on them. So now you've got your decision in principle, you can start looking at properties and start making offers on them. Now, you may be one of those lucky buyers where they go into the first property and it's immediately the one, and you make an offer and you get an offer accepted. But it's possible that it might take multiple viewings to find the right property for you. But also, whilst you are doing viewings, it's a really good time to start actually looking around and taking in what you really want from your future home. Does it need to have a garden? How many bedrooms does it need to have? The location, what the neighbours like, what the amenities like, things like that. So it's a really good time to start building that up in your mind of exactly what you want from your property. And use the estate agent to your advantage. Ask them questions about what the area is like if you don't know it, what the neighbours are like, things like that. Are there any known issues with the property? You can ask them how much interest is in the property. Have there been any offers on the property? You need to be just finding these little things out. And when you're talking to an estate agent, make sure they know you're a first-time buyer, you're chain-free, you've got a mortgage broker, you've got a decision in principle. Make sure you are putting your situation across, because compared to someone who's got a house to sell and looking to move so the chain will be longer, you're in a much more proceedable position. So make sure they know it. So now you've found the perfect property and you want to get the offer accepted. Now, it may be worth here going to talk to your mortgage broker and just asking them how to pitch it. A lot is going to depend on how long the property has been listed for. So the longer it's been listed for, the more likelihood is they'll accept an offer below asking price. If there's a lot of interest in the property or they've had a lot of offers already made, then it's going to be more difficult to get an offer accepted below asking price. So you really need to be finding out from the estate agent how much interest is in the property, how many offers have been made. And then that will help, where to pitch your offer. If it's a family who've taken over a property, maybe from a relative who's passed away, then they are often open to having an offer put in on a property because they're looking typically for a quick sale. So it's really important that you get to understand the situation, the circumstances of the seller, how much interest is in the property, how many offers have been made, how long it's been listed for, and that will help you to know where you can pitch your offer. Thanks for watching this first video of the mortgage journey for a first time buyer. If you have any questions, obviously just comment below, get in touch, and I'm more than happy to help. Keep an eye out for the second part of the video to come very soon, where I cover the journey from having an offer accepted on a property right through to completion.